More than 9,300,000 older Americans living on a limited income currently qualify for property tax relief they are not receiving, according to AARP Foundation's own research. Only about 8% of them ever actually apply for it. That gap is not because the programs are rare or the savings are small. In many cases, this relief can put anywhere from a couple $100s to several $1,000s back in your pocket every single year, year after year, for as long as you continue to qualify. The gap exists because none of these programs are automatic. Your county assessor calculates what you owe with no obligation to ever mention what you might be entitled to save. And the paperwork simply sits there, waiting for someone to go looking for it. Today, I am walking through the 4 real categories of senior property tax relief that actually exist, how each one works, the honest trade-off hiding inside the most generous-sounding option, and exactly where to check your own eligibility for free in a few minutes without paying anyone a single dollar to do it for you. My name is Robert Hensley, and every week I go through the actual rules behind programs like this one, because the agencies and county offices that run them rarely explain any of it to you voluntarily, and the paperwork is often written for someone else's convenience, not yours. I am not here to sell you anything, and if you are new here, hit subscribe and tap the bell now, since new videos post every Wednesday and Sunday. Before the list, one correction worth making clearly, since it directly contradicts a false claim circulating right now. Property tax is not a federal program. There's no act of Congress that sets your property tax rate or your senior exemption, and no federal agency administers any of this. Every single one of these programs is created and run at the state or county level, which is exactly why the details vary so much depending on where you actually live, sometimes even between 2 counties in the same state. There are 4 real categories of senior property tax relief, and understanding which ones exist in your state is the first step toward actually claiming any of them, since you cannot apply for something you do not know exists in the first place. Homestead exemptions reduce the taxable value of your home, so a smaller number gets multiplied by the tax rate when your bill is calculated. Assessment freezes lock in your value or your bill, so it doesn't keep climbing along with everyone else's around you year after year. Deferral programs let you stop paying now in exchange for a lien repaid later, out of the eventual sale or the estate itself. And circuit breaker credits cap your property tax as a percentage of your income and refund whatever you paid above that cap, regardless of what your home is technically worth on paper today. Most states offer at least one of these specifically for older homeowners, and many offer more than one at once, stacked together on top of each other for a combined savings. None of them are automatic. Every one of them requires you to find the program, confirm you qualify, and file an application before a deadline nobody is required to remind you about in advance. Number 1. Homestead exemptions, the most common form of relief and usually the simplest to claim once you know where to look. A homestead exemption removes a portion of your home's assessed value from taxation entirely, so you are only taxed on what remains after that portion is subtracted out. Many states offer a general homestead exemption available to any primary resident regardless of age, then add a larger senior-specific exemption on top of it once you reach a certain age, commonly 65. Texas and Florida are frequently cited as having particularly generous senior homestead provisions, and New York runs a related program called Enhanced Star specifically for senior homeowners, with an income limit around $110,750 for 2026. Though that figure is adjusted periodically, and should be confirmed for the year you actually apply. The exact dollar amount removed from your assessed value varies by state and sometimes by county, so the number itself is worth confirming directly rather than assuming it matches what a neighbor in a different state or even a different county received on their own bill. Number 2, and this is the one worth paying closest attention to if you live anywhere home values have been climbing quickly: assessment freezes. A freeze locks in your assessed value, or in some states, your actual tax bill itself, at a fixed point once you qualify. So rising home prices around you stop translating into a rising bill for you specifically, even while your neighbors' bills continue to climb. Texas freezes the actual school tax dollar amount for qualifying seniors, not just the underlying value, which is a meaningfully stronger protection than a value freeze alone, since it locks the payment itself rather than just one input into the calculation. Illinois runs a senior freeze program that locks the equalized assessed value used in the tax calculation, a different mechanism that still delivers real protection over time. In a fast appreciating housing market, a freeze can end up worth considerably more over the years than a one-time exemption, since the exemption is a fixed discount applied once, while the freeze protects you against years of compounding increases you would otherwise absorb, one after another. If that surprised you, hit like right now so this reaches the next homeowner who needs to hear it before their next bill arrives. And if you have not already, subscribe, since I will keep covering exactly this kind of relief that never gets mailed to you automatically, no matter how long you have lived in the same home now. Back to the list. Number 3, deferral programs. And this is the one that requires an honest conversation about trade-offs rather than a simple pitch promising free money. A deferral lets you stop paying your property tax now, while you continue living in the home exactly as you have been. The unpaid amount becomes a lien against the property, and it gets repaid with interest when the home is eventually sold or passes to your heirs after you are gone. This genuinely preserves your cash flow today, which matters enormously on a fixed income where every monthly dollar is already accounted for. It also genuinely reduces what your heirs eventually inherit, since that lien comes out of the estate before anything else gets distributed. The interest rate on that lien varies dramatically by state, and it is the single detail most people never think to ask about before signing up. Vermont offers a deferral at 0% interest, essentially an interest-free loan against your own home. California's program, by comparison, charges meaningfully more over the life of the deferral. If you are considering a deferral, that interest rate is the single number worth comparing most carefully before you decide, not the headline promise of not paying anything today. Number 4, circuit breaker credits. The category most people have never heard of by name, even when they qualify for it, and could be using it right now to lower next year's bill. A circuit breaker caps your property tax at a set percentage of your household income. And if your actual bill exceeds that percentage, the state refunds or credits you the difference between what you paid and what the cap actually allows for someone in your income bracket. Michigan's version, for example, refunds property tax above 3.5% of household income for qualifying seniors under a certain income limit, with the credit capped at roughly $1,600 a year, paid back after you file. This type of program specifically protects people researchers describe as house rich and cash poor, someone who has lived in the same home for decades, built real equity along the way, but whose fixed income never grew to match a tax bill that keeps climbing right alongside the rest of the neighborhood around them, year after year, regardless of what their own paycheck or benefit check actually does in the meantime. Here is the mechanic that turns eligible people into the 89% who never actually receive anything, year after year, without ever realizing what they left on the table for someone else to keep. Almost none of these 4 programs apply themselves automatically, no matter how long you have owned your home, how clearly you qualify on paper, or how many years you have already been paying the full amount without ever asking. In most states, you must file an application during a specific window, frequently between January and April of the year you turn 65, sometimes earlier for certain programs that require advance notice before the tax year even begins. Miss that window in many states, and there is no retroactive recovery. You simply pay full price for that entire tax year and try again the following cycle, 12 months later, having lost that year's savings permanently. This is not designed to be punitive. It reflects how administrative deadlines generally work across most government programs everywhere. But it means the burden sits entirely on you to know the calendar, rather than on the county to reach out and remind you before the window closes on its own. Here is where to actually check your own eligibility for free in a few minutes from your own kitchen table. AARP Foundation runs a program called Property Tax-Aide, a screening tool covering all 50 states and Washington, D.C., that helps you identify which specific programs you likely qualify for based on your age, income, and location, and walks you through the application itself step by step. It costs nothing to use, and it has already helped people access more than $10 million in relief since it began several years ago. You can find it directly by searching AARP Foundation Property Tax-Aide, and it is worth bookmarking once you locate it. Be cautious of any company charging an upfront fee specifically to file this kind of paperwork on your behalf, since the applications themselves are free and are meant to be filed directly with your county assessor or State Department of Revenue, not through a paid intermediary promising to unlock a discount that was already yours to claim without paying anyone for the privilege. One more detail worth knowing if you are married or recently widowed, since it catches families at exactly the moment they can least afford an unexpected tax increase on top of everything else already changing. Many senior exemptions and freezes are tied to the specific person who originally qualified and applied, and they do not always transfer automatically to a surviving spouse when that person passes away, even if both spouses lived in the home together for the entire time the exemption was in place. Families sometimes lose an exemption they had held for years, simply because nobody filed the paperwork to carry it forward under the surviving spouse's name after the loss, discovering the increase only when the next bill arrives in the mail. If your household relies on one of these programs, it is worth asking your county assessor directly, right now, before it becomes urgent, what happens to it if one spouse passes first, and exactly what needs to be filed to keep it in place, rather than assuming it continues automatically without any action on your part. Here is what to actually do this week. All of it free and doable in a single afternoon. Search AARP Foundation Property Tax-Aide and run the free eligibility screener for your specific state to see which programs you likely qualify for. Call your county assessor's office directly and ask exactly which senior exemptions, freezes, deferrals, or circuit breaker credits you may qualify for, and what the filing deadline is for each one. If you are considering a deferral, ask specifically for the current interest rate before deciding anything, since that number varies enormously by state and directly affects what your heirs eventually receive. If you are married, Ask what happens to your exemption if one spouse passes away, and exactly what needs to be filed to preserve it going forward. None of this costs anything except the time it takes to make a few phone calls and fill out a form. Let us recap quickly. Property tax relief is a state and local matter, not a federal one, and it comes in 4 real forms: homestead exemptions, assessment freezes, deferral programs, and circuit breaker credits, each working through a different mechanism. None of them are automatic, and most require filing within a specific window the year you turn 65, with no retroactive recovery if you miss it. AARP Foundation's free property tax aid tool is the fastest way to check your own eligibility across all 50 states without paying anyone a dollar. Everything in this video is general education, not personal tax or legal advice for your specific property. So confirm your own state and county's exact programs, thresholds, and deadlines directly before filing anything on your own behalf. If you know a homeowner over 65 who has never checked this, share this video with them today. And if you have got a question about your own situation, drop it in the comments. Every Friday, I answer real viewer questions over on my Posts tab. If this helped you, hit that subscribe button and the bell so you catch every video the moment it goes live, especially the ones covering exactly this kind of relief nobody mails to your house. An afternoon of paperwork is a small price for years of savings. This channel provides educational information only and is not affiliated with the Social Security Administration, Medicare, CMS, the IRS, or any bank.